Hello friends, welcome to this video on Gap Advisors channel. Myself CM Manish C. Iyer. The Institute of Chartered Accountants of India has issued an exposure draft of financial statements of LLPs. Exposure draft of guidance note on financial statements of LLPs. The exposure draft proposes to replace the technical guide on financial statements of LLPs. This is a welcome move. I have submitted my comments, which can be downloaded from ICAI's website. I request you to submit your comments also on the same. In this video, I will discuss an important issue of equity and liability in financial statements of LLPs. The exposure draft proposes a structure of financial statements of LLPs similar to that contained in the technical guide. The balance sheet first lists the equity and liabilities and then the assets. The equity and liabilities section of the balance sheet does not have a subtotal showing total equity. Therefore, as a user, one remains confused as to what is the equity of the LLP. Within equity and liability section, it has three subsections: partners' funds, non-current liabilities, and current liabilities. These sections indicate that partners' fund is equity of LLP. The partners' funds comprise of partners' capital account and reserves and surplus. The partners' capital account includes partners' current account, which is a revolving account. Normally, partners can withdraw funds from current account at will. The LLP, except for the limit specified in the LLP deed, has no right to refuse such withdrawal. Therefore, partner's current account does not evidence a residual interest in LLP. The partner's current account meets the definition of a liability. The profits of LLP are added to partner's current account. This indicates that the profit does not increase equity of the LLP. An item to be income must result in increase in equity, and an item to be expense must result in decrease in equity. However, in LLP, the so-called items of income and expense result in increase and decrease in liability. This is because the profits of LLP are added to current account of partners, which partners can withdraw at will. So there is no so basic issue is that the partner's current account, the income, expense, everything is a liability. If we see the definition of liability in the framework and as given in the exposure draft, which is the exposure draft simply draws the definition of assets, liabilities and equity from the framework for the preparation and presentation of financial statements issued by ICAI. Now, how to solve this issue? What can be the solution for this? So there can be two solutions to this. I either amend the definition of equity and liability to permit balances over which the LLP has no right of refusal to be regarded as equity. So it will be an exception to the definition of equity and liability. So normally equity means normally equity is the residual interest of an entity over the assets and liabilities. So after deducting all liabilities from assets, whatever remains, जो भी बच गया वो equity. And for example, in equity the entity has a complete discretion of itself whether to distribute to the owners or not to distribute to the owners. For example, dividend. डिविडेंड डिक्लेयर किया तो लाइबिलिटी है, नहीं किया तो कोई लाइबिलिटी नहीं है. प्रॉफिट कंपनी का होता है तो वो लाइबिलिटी, वो डिविडेंड डिक्लेयर करना है कंपनी को, दैट्स नॉट कंपल्सरी, यू सी. ओके, if a company makes profit, it is not compulsory that it should declare dividend. So declaration, therefore it is a equity. The equity shares on which dividends are declared is at the discretion of the company, and therefore it is called equity share. It is an equity basically. It evidences a residual interest, whereas in case of LLP, in the current account of partners to which profits are added, the LLP cannot refuse withdrawal from the current account. Okay, so therefore, because it is not at the discretion of LLP, the current account becomes a liability of LLP. Now, if the ASB, Accounting Standards Board, wants to treat the current account as an equity item and not as a liability item, okay, then there is a solution. Then it has to make amendments to the definition of equity and liability. So that would be a departure from the definitions in the framework. So it basically, it will have to create a separate framework for non-corporate entities and LLPs. Okay, what that amendment will be is that it will have to permit balances over which the LLP has no right of refusal to be regarded as equity and not a liability, or amend the structure of financial, or the second solution is that it can amend the structure of financial statements of LLPs to specify partners' current account in current liability. So move the partners' current account for partners' funds to current liabilities, or have in both the places. One is have current account in partners' funds and as well as current liabilities. So what will be in partners' funds? The amount amount of that current account on which the LLP has a right to refuse withdrawal. So to that I say it becomes partners' funds, otherwise it becomes a current liability. So these are the two solutions which Accounting Standards Board can evaluate. The first solution will require companies following Ind AS and having Ind AS, Indian Accounting Standards. So the companies following Indian Accounting Standards and having investment in LLP to make significant changes to LLP's balance sheet for consolidation purposes, because for consolidation by companies following Indian accounting standards, the entire partners fund, the current account contained in partners funds will have to move down to liability, okay, and then it will be knocked off with the respective balance. So there will be an elimination of asset and liability in that case. That is so therefore changes, amendments to the LLP's balance sheet might be necessary in the case of first solution. In this case, if the ASB goes ahead with this first solution, then it would also be helpful if the guidance note also guides on the amendments to be made for consolidating LLPs with Indian Accounting Standards financial statements. that will provide members a guidance on what adjustments need to be made to consolidate financial statements of LLPs in accordance with Indian accounting standards. The second solution. What is the second solution? The second solution I suggested is to amend the structure of financial statements of LLPs. So bring the structure of financial statement, bring the balance sheet of LLP in accordance with Indian accounting standards itself. Okay. So the second solution will align financial statements of LLPs with that of companies following in AS, Indian accounting standards. However, this could require significant change in practice of preparing financial statements of LLPs. So, usually the LLPs are in the habit of treating partners' funds as capital. Okay, but then now with this change, they will have to change the practice. So that could be a significant change. You can see every coin has two sides. My preference is the second one. Before ending this video, I would like to remind you that third weekly task room is scheduled for tomorrow. It is scheduled for tomorrow at 3 p.m. Indian Standard Time. Only 4 seats are left. Only 4 seats are left. Kindly scan the QR code from Open Task Rooms page on gapadvisors.com and confirm your seat. Participants securing rank 1 will be awarded a rupee 2500 as cash award, and if more than one participant secures a rank 1, the cash award will be shared among them equally. I hope you found this video useful. Thank you.